all in on the stock market, right? I mean, think about this. For most of the year, Wall Street tried to have it both ways, saying, hey, we're constructive on stocks, but all their targets were tepid, 5,400, 5,500. Well, that's beginning to change. My man Warren Pye is one of my favorite guests on the show, just released this report, in which he kind of says his firm is re-examining their assumption that the market is wildly overvalued. I will caution, I haven't read the report. The headline itself, obviously, when you say S&P 500, 7,000, that caught my attention. Meanwhile, there's Goldman Sachs, their trading desk, and I love this one in particular because the trading desk is now looking for 62.70 by the end of the year. But look at this, folks. Pay real close into this. Says that the rally forces institutional investors to buy stocks. I thought they were already in. I thought they were the smart money. Feel pretty good. They're chasing your gains, folks. And here's another thing that we have to look at. Everyone's obviously talking about election seasonality, and so far it's kind of worked like a charm. It's best when there's no recession, right? This orange line, if there's no recession, so you have election day here, this is the kind of gains you could expect if history repeats itself, right? And then, you know, you get these other things like today's retail sales, which obviously suggests no recession. I'm going to have more later on in the show on that. And earnings season. Earnings season, they say earnings is the mother's milk of stock rallies. So here's your demarcation line. These are the companies that have these are what missed, these are what have beat. We know banks have beat, right? Banks have beat big time. Also, insurance today, one of the top movers is Travelers. And I think we're going to see this technology thing move over. That's over there in ASML. Today, Taiwan Semiconductor became $1 trillion company. It's up huge. Looks like Tina has returned. The investing dynamic is big time. Everyone is now saying, I've got to be in stocks, and no one wants to be in bond. Look at this. Your stock to bond sentiment. It's only been at this place. This is the top 1% rating since 1998. So everyone is jumping on the stock bandwagon, or they're already there. But what's really odd about it, they hate bonds right now. You know, maybe that's a good thing. Maybe it's not. Meanwhile, what else is driving all of this? Well, buybacks. Buybacks are going strong, right? Record amount of buybacks. But this is now where you get a little bit of doubt. So corporations are taking shareholder money. They're buying back stock. Okay, you kind of dig that. But what are they doing with their own money? They're not buying stocks, right? These are the corporate insiders. They're like, maybe the market's too high. Listen, this is not the greatest tool in the world, but it is intriguing that they're buying back stock at a record pace with the shareholder money. Now, of course, there are a few Wall Street holdouts still out there, including my man Barry Bannister of Stifel. They're looking for a 26% drop. They moved it to 2025. We're trying to get them back on the show, as you can imagine. All right, we do have one of the best on the show right now, though. I want to bring in Bianco Research President Jim Bianco. Jim, the stock market's giddy, but it seems that the bond market is saying something different. I'm going to pull up the MOVE chart, the MOVE index here. A really huge spike here just recently. You say that this is a message, it's screaming something. What's going on? What should we be hearing from this?
So the MOVE is the volatility of 30-day options in the Treasury market. We are within 30 days of the election. So it is pricing in that a post-election market is going to be very volatile and very chaotic. Now, what is not clear from the MOVE is what direction. It could be that a red sweep means that we're going to see a bigger deficit because of tax cuts and interest rates go up. It could be a blue sweep means that the stock market's going to go down and you get a traditional risk-off rally in bonds. But what I think the market is saying, and the VIX is also saying this too, because that's 30-day options as well, is that we expect a lot of post-market volatility. It could also be meaning that in the week or so after the election, we don't know who won the election, and that there could be some disturbances and some unpleasantries associated with the uncertainty about who actually won.
Yeah, and I think that probably, for me, is one of the big concerns. Let me ask you quickly about these bond yields. You know, obviously reacting to this economic data this morning, but really even before this morning, yields hadn't been where I thought everyone thought they'd be the day the Fed cut rates.
Yeah, that's right. What you've seen since the Fed cut rates on September 18th, interest rates have gone up quite a bit. We're up almost 50 basis points, 0.5% on the 10-year yield. Now, why is that happening? Probably one of two things. One, the economy is much stronger than people think. The retail sales number today just being the latest example of the strong data. And now with the hurricanes, it's going to be really difficult to figure out what the economy is doing for the next few months because it's going to distort the data. But nevertheless, it's looking like the economy was strong, and 50 basis points of stimulus wasn't necessary. So the bond market's a little bit worried that what you're going to see is higher inflation. And that's why you're starting to see interest rates move up, even though the Federal Reserve is cutting interest rates.
Yeah, I wonder if Jay Powell's going to have any nightmares with Arthur Burns somewhere in the background, right? So, hey, let's talk about this uptick. Economists now looking for a no landing. Okay, folks, so the little red thing is a hard landing. Very few people believe that. 76% are saying, okay, a soft landing. But look at this. The hard landing doubled up. It's 14% from 7%. You've been a very lonely man out there by yourself. They're coming to you. They're coming to you. What do you make of it?
Well, of course, the no landing just means that the economy's fine and it just continues to move along. And if the Fed cuts interest rates and stimulates something that's fine, it might risk overdoing it. But I think the reality is that the data is looking like it's going to be okay. The third quarter GDP, according to the Atlanta Fed, looks like it could be 3.4%. That's a very strong number. And of course, like I got to emphasize again, the problem is that's where the data has been. Where's the data going next? Well, we're probably going to see a very muddled and probably very weak payroll number in October because of the hurricane. But we know that that's a hurricane-driven thing. That's not that the economy's made any kind of a change. So we won't really know what the economy's doing. So in lieu of that, I think people are just going to assume that the economy's okay. And if the Fed wants to keep cutting rates, there's going to be more worries that they're going to be overdoing it and maybe spurring inflation. Yeah,
they're going to have to know something we don't know. In 30 seconds, okay. You had this great chart, the Poly Market, Trump wins versus Trump media, and Trump media, both moving in the same direction here, big time. Are there any other indicators, though, Jim, that you're looking at? Like I look at the Russell, I look at Bitcoin. Some of these things, I think, are sort of become correlated with a potential Trump victory.
Yeah, no, there's a lot of those. And Wall Street's got Republican portfolios versus Democrat portfolios. Republican portfolios would be more like energy stocks. And they're actually starting to perform better right now. And so the market is kind of coming around in all instances that it looks like a Trump victory is on the precipice. Now, I'll warn, it's like a 55-45, probability of a Trump victory. It's not 80-20 or 90-10. And 55-45 can easily be reversed in the final 19 days. But Trump's heading north, and the market is starting to price in the probability that he might win. Yeah, I think 19 days ago, to your point, it might have been the exact opposite. But we're getting closer, right? Hey, Jim, great stuff. As usual, thanks a lot. Appreciate it. Thank you.
All right, folks, today's reporting.